Hold on tight, crypto fam. What you're about to see, it's not for the faint of heart. Just when we thought we saw a glimmer of hope, Vechain, a project many of us have staked our faith in, is facing a brutal, unexpected assault. We're talking a sharp 5.17% intraday drop that has wiped out all recent gains. And here's the chilling part. The price is now teetering on the edge of a precipice, a critical support level that, if broken, could unleash a wave of selling unlike anything we've seen in a long time. Is this the moment Vechain investors have been dreading? Is 2 cents the next stop? Or can we pull back from the brink? Let's dive deep into this unfolding crisis. Alright, let's set the stage. Just last week, after what felt like an eternity, Vechain, or VT as you know it, gave us a fleeting moment of relief. Remember that 3-day crash? It was brutal. But then, VT, like a phoenix, seemed to rise, clawing its way back with over a 16% rally. It climbed from a low of 0.02253 all the way up to 0.02630. We were talking about a potential recovery, a re-establishment of bullish momentum. People were getting excited, hopes were soaring, but then it hit a wall. A massive, invisible wall that sent shivers down the spine of every VET holder. What wall am I talking about? The infamous 50-day exponential moving average, or EMA. This isn't just a line on a chart, folks. It's a dynamic resistance level, a psychological barrier that often dictates the short-term trend. And VT, despite its valiant efforts, failed to punch through it. It was rejected, flat out rejected. And that, my friends, was the trigger, the moment of truth. That rejection immediately initiated a sudden, aggressive sell-off. It's like the market was just waiting for that confirmation, a signal that the bears are still firmly in control. This isn't an isolated event. When you look at the bigger picture, the 50-day, 100-day, and 200-day EMAs are all pointing downwards. What does that mean for us? It means VT is firmly, undeniably, trapped in a broader, long-term bearish trend. This isn't a quick dip, this is a sustained struggle. And if you're looking at the daily chart like I am, you'll see the MACD and signal lines doing a chaotic dance, giving us mixed signals. It's a classic sign of increasing uncertainty, of heightened volatility. It's a market that doesn't know where to go, a market filled with fear and indecision. And in crypto, that kind of indecision often leads to one thing, more downside. Now let's talk about the immediate danger. This latest drop, this brutal rejection from the 50-day EMA, has pushed Vechain below another crucial support zone, $0.02471. We are currently trading right now as I speak, around $0.02222. But here's the absolute hair-raising truth. The real battleground is looming. We are staring down the barrel of the 0.02199 support level. This isn't just a number, this is a line in the sand. This is where buyers must step in. This is the last bastion of defense before things could get ugly. If the bears, continue their relentless onslaught and manage to smash through 0.02199, we are looking at a potential cascade. The psychological 0.02000 level becomes the next target. And from there, we could easily see VT plummeting all the way down to 0.01974. Think about that for a second. We're talking about a significant percentage drop from current levels, erasing months of hard-fought gains for many investors. But is there a lifeline? Can we still pull a rabbit out of the hat? A rebound, while against the odds, is still technically possible. But it requires something monumental. The bulls, the buyers, they need to show up. They need to defend this immediate support at 0.02199 with everything they've got. And not just defend it, they need to launch a counter-offensive, push the price back above 0.02471. Only then, only if we see a strong close above that level, can we even dream of another attempt to retest that stubborn 50-day EMA at 0.02609. The odds are stacked against us, but in crypto, anything is possible. The question is, do the bulls have the fight left in them? Now, let's pull back the curtain on the derivatives market, because this is where the true sentiment of the smart money, of the professional traders, is laid bare. And what we're seeing here, ladies and gentlemen, is not pretty. It confirms our fears. Open interest in VT futures has plunged by a staggering 9.48% to $62.85 million. What does this tell us? Well, it tells us that traders are pulling back. They're reducing their exposure. This isn't just waning bullish sentiment, it's a stark sign of reduced participation, of traders losing confidence in VT's immediate future. But it gets worse. Look at the liquidations. We've seen a brutal $419,000 worth of long positions liquidated. $419,000. Compare that to the paltry $6,000 in short liquidations. This isn't just a disparity, it's a complete imbalance. It screams that optimistic leveraged bets were absolutely crushed, while those betting against VT barely felt a scratch. This is the market telling us in no uncertain terms that the bulls were caught off guard and decimated. And if that wasn't enough to make your stomach churn, the long-short ratio, a crucial indicator of market bias, has plummeted to 0.8744. A ratio below 1.0 means that the number of traders betting against VT, the short positions, significantly outweigh those betting for it, the long positions. It reveals a crystal-clear tilt towards bearish bets. The smart money, the institutional players, they are overwhelmingly positioned for more downside. This decline in trader confidence, the heavy long liquidations, and the dominant bearish bias in the derivatives market, it all coalesces into a single chilling conclusion. The risk of further price losses in the coming days is not just a possibility, it's a very strong likelihood. So what's the final verdict from where I stand as an analyst? Vechain's failure to reclaim that crucial 50-day EMA, combined with these undeniably weak signals from the derivatives market, points to a very real, very imminent potential breakdown below that 0.02199 level. Unless we see an unprecedented, swift and massive influx of buyers, a white knight scenario in the immediate hours and days, the price of VAT is highly likely to test those lower support levels, potentially dipping towards that 0.02000 mark, or even lower to 0.01974. This is not a time for complacency. This is a time for vigilance. For those holding VAT, understand the risks. For those looking to enter, wait for clear signs of reversal, not just a dead cat bounce. The crypto market is a battlefield, and right now, Vechain is in the crosshairs. Stay safe out there, do your own research, and never invest more than you can afford to lose. The market waits for no one, and knowledge is your greatest defense. Patience is very important at this stage of the market. Yes, two countries are currently fighting, but eventually that will come to a halt. Understandably, if you have sold in fear, it's okay. You get the option to buy in lower. But if you understand the project and the longevity of it, then there should be no question to your conviction to hold. I hope we all win. Make sure you hit that like button. If this analysis was valuable, subscribe to the channel for more urgent crypto updates and leave a comment below. What do you think is the next move for Vechain? Can it bounce back or is it heading for a deeper fall? Important disclaimer, I am not a financial advisor. This video is for educational and entertainment purposes only, and should not be considered financial advice. Cryptocurrency investments are highly speculative and carry a significant risk of loss. The value of cryptocurrencies can be extremely volatile, and you could lose all of your invested capital. Always conduct your own thorough research and consult with a qualified financial professional before making any investment decisions. Never invest money that you cannot afford to lose.